Hello, everybody. Welcome, welcome. We are going to get started in just a second here. Welcome on in, Piper, Kev, Todd. Good to see you guys. Oh, man, it's late for you. Yeah, get some sleep. It's been a long week. Long week. Good week, but man, a lot of stuff. Good week in the market. Not a great week for America, probably. Anybody else stressed? I don't know. It's been a stressful week. Good afternoon, Danny. We're getting started in just a second here. Guy, good to see you. Oh, talk. Don't feel bad. I had a blast. It was actually really fun. Ah, and I had a couple hours to kill before I went out anyway, so it was perfect. No, I like that you guys have a lot of questions, so I wanted to kind of open this webinar up a little bit more than the others. So I do have a little bit of a thing for you, a little presentation, but it's not quite as long as the others. It's not quite as in depth. Um, I want to kind of open the floor to any kind of questions you might have. So just keep that in mind. You can drop them in whenever, and me and Tim backstage will compile them and work through them at the end there. So putting that on your radar because people responded really well to that. All right, guys, we got 37 in here. Not bad, not bad. I think that's good enough to start. So we're going to be talking about small versus large cap rotation today. We're going to be talking about how we can time that and kind of just kind of get a sense of how these rotations occur, what we can look for, and when it is actually time to pull the trigger on them. Because if you are a small cap bull, you have been pump faked 10 days till Sunday. It's no being a small cap bull until it is, right? So we got to figure out when it's time to put that risk on sentiment in action and actually juice our returns with risky small caps, because otherwise, you can be stuck in a lot of stuff that doesn't move or move sideways for 5 years. While if you were in Meta, Apple, something like that, you'd be doubling your money. So that's no good. I think the risk of missing outsized returns in the chase of getting outsized returns with small caps is probably more, that's the thing that people should really be watching out for. I've seen that occur more times with small cap investors than anything else. If you're good and you know what you're picking, of course, but can mostly indices and general rotational money flow, like when the market at large, institutional investors are looking for these baskets of small cap stuff. So with that being said, let's get on into it. Thank you, Leo. Nice to meet you too. Welcome on in. Love seeing new faces in here. So we're going to hop on over to presentation. There I am. All right, let's get into it. So this is what I'd like to teach you by the end of this. I want you to understand what the predictable patterns are that institutional money is going to follow to kind of cycle between different market caps, small, mid, large. Three specific triggers that I think are going to signal that rotation and the opportunities to actually pull the trigger there. I think this is kind of prescient time-wise because IWM is potentially setting up for a similar situation in 2016 when we saw a lot of exuberance when Trump was elected, and we saw quite a sizable run in IWM. And we can talk about that. We have that example, and it's going to be a really good case study because it talks about a lot of these concepts and really brings it to fruition in a way that's very relevant right now, considering the current climate, which is very dovish and very exuberant. And we can debate whether this will have the same legs as the previous rally, but in general, we got to play the charts in front of us. And when a chart is setting up like this, we gotta see and know what to look for to see if the money is really flowing in and will stick this move, so to speak. So the last thing here is just kind of putting this together into kind of a more practical framework so you can position yourself ahead of these major shifts, whether it's in IWM, but also I wanted to kind of back this one or put this one back to back with the cyclical rotations and cyclical bottoms one, because that's kind of the groundwork for all of this, because that is essentially what IWM has done as it's dug itself out of its multi-year base and is now starting to push and potentially expand higher. So these ideas build off of each other, and right now is the time to watch these baskets. So we are going to do so, and we can talk about more examples as well after. So what is market cap rotation? When I say that, what am I actually talking about? It's basically the cyclical movement of institutional capital between small cap, which is defined as 300 million market cap to 2 billion, mid cap, which is 2 billion to 10, and large cap, so anything above that. So the scale of the impact here is that about 4 trillion, even more, of institutional assets, they're constantly flowing between these segments. And if you can track this cyclical flow, you can catch some really good moves and you can know which setups are actually going to follow through. Because so many times you'll see a setup that looks good in a vacuum, but without the context of whether institutional inflows are coming into the sector as a whole, the basket that it is a part of, then you could see a fake breakout. And you could be sitting there wondering, why did this breakout fail while this other breakout didn't? Well, maybe that other breakout had the legs of institutional flow, behind it, and it was actually getting pushed because the whole sector was getting bid up, and there was a demand on a deeper level, and that can be the difference in a setup playing out or not. Oh man, chat is popping. I can't keep up. All right. So yeah, those are the kind of things I want to talk about here today. And let's get into the details here. So what's the psychology behind flow? So there's risk on and risk off mentality. And most of you are probably familiar with this, but just in case, risk on environment is an environment where money flows to small caps in general because they're higher in growth potential. There is more of a exuberance and a sentiment that these small companies are going to be significantly repriced going forward, usually in the context of fiscal policy, or fiscal and monetary policy, essentially the macro of why it might be beneficial to be a small cap stock in the market. So, for example, if we're getting interest rate cuts, this is the biggest one, then their whole debt structure becomes much more appealing to investors. They suddenly become less risky. Debt is cheaper, money is cheaper. So it's these kind of cyclical frameworks which you can use to position yourself for potential big moves in some of these small cap stocks. So if we are seeing a sustained dovish environment, if the Fed bends the knee to Trump and does what he wants, we will see a lot of potential reasons. I'm not saying the move will stick, but a lot of potential reasons we could see a significant rally in small caps again. So that's a risk on environment. Risk off is just the opposite. That's when money generally flows to the lifeboats. It flows to the safest names, which have the best balance sheets, the most free cash flow, the most ability to weather an economic downturn. So that is not what we're seeing today. It is interesting to see how strong the mega caps are, especially recently in the past week or so. We're seeing breakouts in a lot of those names as well. So what we're generally seeing is a broad-based rally where everything is starting to participate, even names that generally have been pretty beaten down. Stuff like China, for example, going crazy. Shout out to my Baba boys. Shout out to XBI, all the biotech guys. They're doing great too in the past month or so. So these are not the signs of a risk-off environment. These are the signs of an exuberant market that wants to go up. So we have to look at long-term ranges like on IWM and consider the potential significant break of that. So the institution factor here is that pension funds, mutual funds, and ETFs, they drive like 200 billion or more in monthly flows. There is so much money that can push these stocks if you do catch something that will be holding a sustained bid where these people can buy it and hold it, or institutions can buy it and hold it there. So sorry, catching up on the comments here. So yeah, absolutely. We got nice. Got double the viewers. Thank you guys so much for coming. If you're coming from Trader TV Live, welcome. Glad you are here. We're going to be doing an extended Q&A session at the end here. So think of your questions. Feel free to drop them. I'm going to be going through all of them. And we're going to have a good time. Right now, we're talking small cap and large cap rotation, how we can profit from the money moving from one of these baskets to another, and what situations precipitate these moves. So the historical performance patterns for this kind of situation are basically this. So you're going to have small caps outperform large caps by 60% of, I'm sorry, let me read that. Small caps outperform large caps 60% of the time in bull markets. And we have seen a lot of underperformance recently. So we might see a historical return to mean there. The large caps outperform small caps 75% of the time in bear markets. And this is simply because, like I said, if you have more free cash flow, the more ability to weather economic downturns, you become more and more appealing for these institutions that don't simply have the option of not owning stocks. They can't just sell everything, you know? So if they need to move money from a riskier place to a safer place, often they'll buy stuff like, oh, I don't know, Apple or components of the Dow Jones, things that aren't going anywhere, no matter how bad things get, essentially. So rotation cycles in general historically tend to average 8 to 14 months. That's generally how long these cycles last before you start seeing institutional distribution in terms of, for example, tracking ratio charts. So it doesn't mean that they will necessarily immediately start going down, but they will eventually start underperforming, and then they likely will retrace significantly, just because that's the nature of risky investments, right? So peak rotation periods can see about 20% performance gaps. So there's a lot of money to be made on these, and they can be easy trades too. These can be slam dunk trades if you time them right. So that's why we have to have the framework in place, and we're going to be talking about that with the three pillars of what we're going to be looking for in these cyclical rotations. And here they are. Three pillars are economic, technical, and sentiment. And this is mostly arbitrary, and I just made it up, but this is how I classify them. So we're rolling with it. Pillar one, the economic triggers. So these are going to be the most material, and they're going to be the most significant, I would say. For me, obviously, the technicals are almost always trump everything, and I'd say the only time for me they don't is when there is a significant macro factor at play, like the interest rate environment changing. So if you have rising rates, that's generally going to favor large caps because they have less debt sensitivity and they have an established cash flow. They are more resilient. If you have falling rates, that generally favors the small caps because it's cheaper to borrow money and you can accelerate your growth. It's you can restructure your debt in more appealing ways. It's just easy to be a small business when money is cheap and rates are being lowered. And it's that kind of exuberant environment. So the current context is, it essentially Fed policy, it directly impacts like 2 trillion or more. And in terms of corporate debt. So we really need to be very conscious of some of these companies that are considered dogs, essentially, that are considered really, really not good. So that's kind of a lot of the names in the ARC basket. So no surprise that those names are outperforming into this potential cyclical change. And to me, it is indicative of this potential rally having legs for months, if not longer. So, that's kind of what I'm looking at in terms of economic triggers. In terms of the actual economic growth cycle, so in the early recovery stages, small caps are going to lead, and that's just because that kind of leverage kicks in, and people are starting to be bullish, and they're starting to see bases break out, and it's the time where people are finally starting to be a little bit risk on again. Mid cycle here, large caps are going to probably do the best, and it becomes a matter of being a stock pickers market more, I would say, where when more and more sectors are starting to play ball, you have more areas of the market which could provide the next kind of bit of fuel up. Because remember, money is always cycling between stocks. Primarily, it doesn't leave or enter the market. In general, most of the money just moves around, right? So this is a really good time to be a stock picker, and actually trade individual names and find these best setups that are starting to lead. And when more setups like this are working, as they generally do in the middle of the cycle, it's just a good time to be in the market. Late cycle, you will start to see flight to quality and that'll benefit the large caps. And this can start to be the basis of some of your kind of like red flags on when it's time to be less risk on there. So you guys talking uranium. Yeah, uranium's good. I'm still in my OKLO. Yep. I think I think all of these names are going to break out majorly. I really like LEU as well. That's an insane mover. What a unicorn there. I'm in some UUUU as well. Just throwing that out there for the uranium boys. Also, just the URA, just the ETF, easy money there. CCJ, beautiful chart. There are a lot of these charts that just are phenomenal. And the best part about them is, sorry, I know I'm getting on a little bit of a tangent. Where it's Friday, it's casual Friday. The best part about these things is the technicals are phenomenal, but the narrative and the fundamentals are even better. Honestly, like the uranium play is just what can you say? It guts me that I didn't have conviction early because I was a younger investor, and I was like, well, this seems like a slam dunk, but they just keep going down. I don't get it, or they keep trading sideways. So I got in late overall, or I got out early. Depending on how you put it. But yeah, amazing sector there. Amazing sector. So going back to our pillars here, let's talk pillars. So the last part of the economic trigger pillar here is using credit spreads as kind of a leading indicator. And so you can track these spreads in various ways. If the spreads are widening, generally that'll lean towards a small cap rotation. And then if they're tightening, small cap opportunities start opening up more, and you can start looking in those kind of baskets. Names that, if they're just, I mean, hey, just look through the RK holdings, look through stuff that like these zombie codes. They're not necessarily good to hold forever, but you can catch really significant moves, and they're this is the time where you can see them pop pretty significantly as shorts realize this is not the time to be shorting buckets of crap, and if they stay, they can get squeezed. So track the high yield credit spreads, and you can do that in a ratio chart versus the 10-year. And this gives a very cool, view of this part of the market. Also, just in general, since we're talking corporate debt, other tickers to watch are HYG and JNK. We can pull those charts up later. I'm actually going to do it on my other screen really quick because I want to see what they did this week. I haven't been following the past couple days, but I would presume that they are spacing for a big move up. So they are flat on or slightly up on the week, which is breaking out of a 3-week pennant, which is on top of a massive stage one base top. So there, to me, I got to be bullish when all of these indicators are telling me like we want to pump this thing, we want to run it hot. Regardless of your political views with Trump, it's the age of grift. What can you say? He came into office and launched a shitcoin. So it's hard to bet against charts like HYG and JNK in this environment. So that's kind of what's framing my views going forward here into cuts and into the end of the year there. So going on here, we got our technical triggers. So what I like to watch, I really like to watch ratio charts. So I'll do IWM over SPY, and then I'll look for if you're above 1.15, small caps are strongly in control. Below 0.85, in general, large caps are dominating. Let me actually check on that where we are at. For reference, we are at 0.36. So this is his pretty historically speaking, this is incredibly significant underperformance in IWM. It is actually, we are just pushing off of lows from .com. So it is, sorry if that audio is coming through. I have some program telling me what time it is. Anyways, so we'll be looking at these charts later. I just want to power through because we don't have too much more left, but then I want to talk about these charts because it's really interesting. You know what? Let's throw it on now while we're talking about it. It's really important. Bear with me 1 second here. Gonna switch screens. There you go. So this is the IWM over SPY monthly chart. I'll clear the drawings. So what do we see? We see that the last time it was this, the small caps were this undervalued to large caps was way back in 2000. So very interesting, especially when you compare. I don't know if anybody's seen that chart that's floating around of that tweet with a chart correlations of the release of Netscape in 1994 and what the market did into the dot-com bubble, and the release of AI, ChatGPT, and what the market is doing up to that point. And basically, it's saying that we are in the middle innings and there will be a blow off top if this correlation repeats the general thesis of an incredibly historically disruptive technology, either Netscape leading to the World Wide Web or AI leading to You tell me. Utopian UBI, paradise, or fascist over a corporate technocracy. Who knows? But whatever it is, something's telling me, and the charts are telling me, that we are going to see a large move up and probably a blow off, and probably then a significant period of correction. Timeline wise, it's very hard to nail these things. Um, I generally tend to refer to the George Soros school of thought, which is when I see a bubble, I buy it. I don't know when it'll pop, but I know that there's room left when I look at things like this and I see the way that the Fed is signaling and trying to basically seem to try to follow what Trump wants. So that being said, there are always tail risks. I think they're primarily like constitutional in nature, but it's hard to be bearish when charts look like this. When things get bad, the charts will probably have a lot of warning signs. So going back to what we were talking about, let me bounce right back. Let's see. Are you guys seeing Talk's comment there? We watch high yield and junk too. Okay, excellent. I wasn't sure if that's just appearing. I think it's a graphical glitch. But yeah, okay, perfect. It's gone now. All right, and you can see my screen. Perfect. So going back to the technical triggers here, these are the ratios that we're looking for. So we are still way far off for any kind of outperformance for IWM in long term a sense. Short term, for the past couple months, it has been fighting to outperform and is just starting to outperform a little bit here, as we saw from the monthly candles on that chart. So it's just something to keep in mind that we are still very early in this rotation if we are seeing it. And I'm not saying we necessarily are, but that is, the way I'm seeing things lean. So going forward here, for volume analysis. So keep, let's see, the small cap ETF is IWM, if anybody's not familiar. So volume spikes are often going to precede rotations, and we're also going to look for some of the indicators. If anybody watched my cumulative volume indicators webinar, these are really useful here. So I like to use the CVD. That was very clear in the 2016 example that we'll look at. But we're generally looking for volume spikes in a sign that people are entering this small cap market in size. So I think a key signal is 3-day average volume over 50% above the 20-day average. So I always use the 20-day average when I'm doing any kind of volume analysis. Just keep it simple, and it's a great moving average because it's basically 1 month of trading data. So if you have 3 days of significant volume higher, that shows that it's not just a 1 day small rotation, because often they'll do that intra-week where money will flow into small caps and flow into mega caps and then flow back into small caps to finish the week high on small caps. Well, usually the other way around. Usually IWM is used to hedge Qs, and the growth names in tech will outperform the IWM. But in general, these are some things you can look for. If it's multiple days of this, then it's not these short-term intra-week rotations, and it could be the start of a significant cyclical rotation. You can also look for patterns in sector leadership. So small cap leadership sectors are going to be probably like, you're going to be looking for the strongest tech names that are under that size. You're going to be looking for the strongest healthcare names, Oscar. You're going to be looking for, the various leaders in the various baskets of, or sub baskets of small caps. When they start doing really well, that is a great sign for the sector overall. Maybe you can look at the average advanced decline or the average, move in some of these names and see, okay, if the leaders are starting to break out and more names in these baskets are starting to hold over 20-day moving averages, hold over 9-day moving average, hold over 200, all these kind of key moving averages. These can give you some kind of metrics to gauge when it is time to go. But in general, in any sector, when the best names are starting to break out, that's when you should start looking for the sector to follow and for the market to play catch up, essentially. So Large cap safe havens are going to be sectors like utilities, consumer staples, and telecom, basically things that are very stable, very dependable, very reliable, and will always be needed and probably needed more in economic downturns. So people will stop buying Ferraris and they will start, well, actually, bad example, rich people never stop buying Ferraris. That's why the race chart, Ferrari's chart, just keeps going up no matter what. Okay, bad example because luxuries are actually recession resistant, very recession resistant. But everything else, essentially, consumer goods. How about Teslas? People will stop buying Teslas when stuff gets hard, but they won't stop buying, groceries, stuff like that. Paul mentioning glass companies for telecoms for all that fiber. Yeah, GLW, I believe. Is that's the ticker? Corning Glass. That is a unicorn chart right there. Let me look at it. Yeah, wow, look at that. That thing's just going to keep surging all the way to 110 and probably higher, all time highs. So, yeah, the ticker is GLW. Yes, that's Corning Glass, I believe. Yeah, amazing company, amazing company. So, Talk asking an interesting question that I actually need to do some more research on. Does dollar sell off push the small cap the sector? Um, I think that we are seeing a lot of interesting dynamics start to kind of unwind with the dollar, just in terms of the shift overall in its place in the geopolitical global economy. Um, I am a believer of eventual de-dollarization to some degree. Not one of those crazies who think, well, we won't be pinned to the dollar in 5 years, but I do think that there's going to be a continuation of the shift and an exponentiation of the shift in dollar dependence to dependence on other potential pins, other um, basically, I'm saying buy crypto, I guess, probably. Um, That's a good question. I need to do more research. Adrian talking copper as well. Copper, Dr. Copper is a great leading indicator of economic growth. Everything needs copper essentially. You can't grow without copper as a society. Um, just going through some random comments here. I want to get to more of them in detail when we can go through charts. So yeah, actually, I'm going to hold off on that. I do agree, Jesus. Humana is really holding down the sector. A lot of things are holding down that sector. But now that UNH is woken up, we can see healthcare start to outperform, which is interesting because either that's a defensive sector, right? So either we're seeing a broad-based everything rally, or we are seeing accumulation in risk-off names and sectors. So that's something interesting. There's also the interesting component that the largest component of the risk-off sector is now a risk-on play because it's like speculative and it's like surging out of a technical bottom. So there's a lot of weird stuff going on that I'm keeping an eye on there. And yeah, that being said, let's get back to whatever the heck I was talking about. Been a long week, guys. Thanks for bearing with me here. Um, so the last thing about sentiment triggers here or the last pillar, I should say, are sentiment triggers. So you can watch things like 13F filings, which are, if anybody doesn't know, they're quarterly institutional positional changes that they have to report. So often this can be the kind of breakout of these because the institutions have been loading them for a full quarter. Often they are doing it very deliberately to not push the price up. And then it's like, oh, ta-da, look what Michael Burry's been buying. Look what, whoever your favorite guy has been buying. Um, when the Druck buys something, people listen. When Burry shorts something, people listen. So that's something to consider. And it's a combination of factors of, oh, this gets retail excited. There's more inflows. But primarily it's because institutional investors know what they're doing. And they also push the market with their institutional investments to some degree if they work or if they're in alignment. So yeah, good thing to keep an eye on there. You can look at ETF flows. You can track the daily flows of IWM versus SPY. You can look for large either dark share, dark pool share buys, or you can look for essentially big prints are the big thing you want to look for a bottom. I forget his name, but there's a really good Twitter account that only looks for big prints on everything, and his hit rate is very good for calling tops and bottoms. Or if it's a big print in a very bullish sector, it can also be a sign of major extension, like a powerful breakout of the range. So that's something to keep an eye on. The big prints. Also, you can look for big options flow. That's less important, I would say, but it is significant. That's more timing sensitive, and that can often be an indicator of other things too, like hedging into data events or stuff like that. So I like the dark prints more for these, or the dark pool prints and the large prints more for this kind of sentiment slash technical potential inflection point. So insider trading is another thing. Small cap insider buying is crime is in, boys. If you see somebody buying a ton of their own company's stock, not that that's criminal, but if you see a ton of inflows into names that don't seem to have any catalysts, and then all of a sudden, boom, there's a big catalyst. Like, that's you got to keep an eye on those big insider buys or big insider sells. Palantir, for example, you could play it very well by saying, man, these guys are still buying more. It's crazy. It must be going higher. And oh, they're finally starting to sell at 190 or whatever the heck it was. Doesn't always work as well, but often that can be a sign of a relatively major top or bottom. Another example, anybody who was playing Amazon back when it first was testing 200 and it would just beat its head against it and form like a perfect ascending triangle into it and then just not break out. It was because Bezos wanted a basketball team or whatever that, he was literally just saying, oh, I'll sell it into every single bullish person in the world. So always keep an eye on those big insider buys or sells. And then, look at VIX levels too. So above 25, stay away from small caps. There's no good news that can, it's going to suck. Everybody's scared. VIX is elevated. Everybody wants the lifeboats. There isn't going to be enough institutional inflows to really get many breakouts to stick. So it's playing a losing game there. When it's below, like 14 to 16 is kind of the range. I said 15, just, but I use the 14 and 16 handles more prominently than the 15. For me, they're much bigger pivot points and much bigger kind of signals of regime change. So yeah, like especially under 14, this is when we start looking. So we have this interesting opportunity where IWM relative to SPY is historically incredibly low, yet we have VIX very low as well. So there is the potential for explosive moves here, especially when you throw in the dovish sentiment and potential for, whatever you want to call this version, this cabinet's version of fiscal and monetary policy. So I don't know. It's going to be interesting, and we could see some crazy things happen. So last thing here, or a couple things. Put call ratios can be useful too. Extreme readings often signal reversals. When too many people are hedged, we go back up because the classic shout out Jem Croissant or Carson and all of the croissant boys, the volatility guys. So his whole thing is knowledge is volatility dampening, right? So if something bad is on the horizon, but everybody knows, we all hedge it. Market has to hedge against everybody assuming it's going down. The market has to buy itself, like market makers have to buy the market. You get this. That's essentially the technical reason behind climbing the wall of worry. So just something to keep in mind. So how do we implement this stuff here? Oh, second monitor died. Let me reboot it. One second. All right, you should be able to see my screen now. Thanks for your patience, guys. Boom. And there's my face. Perfect. Okay, getting back into it. The practical implementation. What's the playbook here? We are going to be looking for a triple confirmation system here, a combination of the economic signals. So that means we're going to be checking about, in on the current Fed policies and what they're doing there, as well as credit spreads to kind of get a feel for where the risk sentiment is. The technical signals are going to rely a lot on ratio charts. So RUT or IWM over SPY or SPX. And you're also going to be looking for the volume patterns there for those spikes or those large prints at the bottom or towards the bottom. Or because IWM isn't at the bottom of the range now, you can also be looking for those big prints into the top of the range, and you need to see confluence between that high volume and price moving in the right direction, right? So be very wary if you see the volume, but price cannot surge higher. Just keep that in mind because these prints can be tricky, right? Because a big print at the top of the range usually means that you're going back down because there was a big seller who got out at the top, and now they'll go back and they'll wait to the bottom, and then they'll buy there. If you are in a significant environmental like regime change, for example, then you can see a range break on high volume, and you do not want to be short that. So keep that in mind. Did we get to the third? No, we didn't. Sentiment signal. The last thing there is just reviewing institutional flows and those VIX levels to make sure that this is an environment which is conducive to small cap investing. So on a bit of a different, or just kind of extrapolating from this, a lot of you guys are probably day traders. A lot of you guys probably don't care about investing as much, and you're more here for day trading stuff. So this is really important because when you are in an environment like this is a great time to be a small cap day trader. We're seeing a lot of crazy moves. If anybody caught QMMM, insane. Anything like that. So many stocks are moving massively. Volatility is low overall, which means you can get big squeezes, big moves, and easy upward action. So good time to keep a watch, to keep updated on your small cap list. Look out for those big volume breakouts and look to play either continuations or yada yada. Whatever your strategy is for small cap, but in general, it's a good time to be in that area. So these are the three things that I'm going to be looking for here, and then I'm going to be positioning based on this. So essentially, you can look for the direct rotation, from IWM into SPY. You can just play literally just the overall indices, and that's probably the safest way to do it. But me, I'm an individual stock picker, so I will be digging into these baskets and seeing what's outperforming and trying to catch some of those leaders. In terms of sector specifics, the overweight, sorry, my brain just shorted out there. What did I mean when I wrote this? You ever read your own writing and you're like, what? Okay. So in general, you want to be overweight small cap sectors in favorable periods, and you want to de-risk as the sentiment starts shifting from dovish to hawkish and risk off there. So just focus on the highest quality names in whatever sectors you're looking for, and try to play those leading sectors and catch those sectoral rotations. So the risk management framework is important when you're talking small caps. So I don't think that you should have more than 15 or 20% of your port in rotation trades, just in case you're wrong, because then they're all going to kind of fail probably. And it feels really bad to get stopped out on multiple positions on the same week, just because you were triple dipping in a thesis and just dead wrong. So same kind of basic stop loss rules as general, these are really just rule of thumb blanket rules. It's different for every single stock. So honestly, maybe not even worth mentioning, but in general, 8 to 10% stops is where you really need to have conviction or a strong reason to hold the position, because after that, it's probably going to be indicative of a significant trend. If you were looking for a breakout, you're probably buying in consolidation and it's expanding down. So that's not something to get dragged, into. So time horizon wise, generally these sectors or these rotations are going to last, I think, 8 to 14 months. So, you want to kind of target in the middle of that, right? You don't need to hold the very beginning. You want to wait for confirmation. You don't need to hold till the very end. You don't want to get blown out if, whatever news hits and people are looking to de-risk these things way up high. So that's kind of the whole gist of most trading strategies that are good, I think, is you want to catch the middle of a move. You want to wait for it to be sure that it's real, and then you want to get out before it could potentially die. So not rocket science there, just good old sound advice. There are some advanced strategies you can implement here. Anybody who's been trading with me in my Discord knows I like to do some pair trades every once in a while, only if I think it's a real easy one. So this is kind of what we call a Texas hedge. If I was to long IWM and short SPY, It's like, why not just long IWM? Like I don't really want to short the broader market, even if I think that IWM will outperform, you know? So, but there are some that I do find more appealing. Like we, into the tariff news, we got long long Google and short Apple in a pair trade, because essentially the thesis was tariffs impact hardware more than software, as well as Google was undergoing litigation that was likely risk was overpriced on, and it was very likely to revert back to the upside with the rest of the mega caps, since it was significantly outperforming, and I knew it was a high quality name. So for when it's a slam dunk like that, pair trades can be great. If we start seeing a lot of the signals that we talked about, you could start considering something like that. I think probably better strategies for this could include holding blocks of shares of these small companies and selling covered calls when you feel like they're overextended. This is a good way to be able to weather the volatility of these names. So if you get called away, you're probably getting called away for a very nice sum, because you get a lot of premium on selling options on small caps because they're high volatility, high IV. So you can collect this premium and hold the position, and slowly over time, if this is a 8 to 12 month rotation, you can pay for any drawdowns that you might incur on the way to the larger move which you're anticipating. So good strategy there for sure. You can also look into things like wheeling if you're not sure that the stock is ready to go out, but you want to hold a position. So that's a little more advanced, and that involves it's a multi-leg option strategy that we can talk about in another one, actually, because I think it's probably worth a whole webinar. So internet, yeah, if you guys like trading options, let me know, and I'm happy. I started with options, so I love playing around with advanced option strategies and stuff, and we can talk about those as well and when to implement them. In general, just whatever you guys want to hear about, let me know, and I'm all about giving the people what they want. So that's about all I have to say about position strategy. And yeah, in terms of execution and monitoring in general, like we talked about, we don't want to get in too early. So we want to enter, we want to wait for it to be confirmed. And then in that kind of week or 2 weeks, we're going to be looking for good spots to actually get long. And we just don't want to buy a fake breakout, essentially, because when IWM it doesn't stick, which it often doesn't, it is just no fun to be in. Pretty simple. So dollar cost averaging is another way to do this. If you think that something is deep in its base and in the next 3 to 6 months, maybe it will break out significantly, but you don't know when. So for example, a lot of the guys in our server have been DCAing stuff like, China before it broke out. Now, obviously that's a different kind of trade. That's a momentum trade. But biotech in particular, kept giving great entries where names were trading like at book value or below book value, crazy stuff. And you just knew that eventually people were going to want to buy things that could double or triple or quadruple, and very risky stuff like that. So yeah, those are some ways that you can kind of execute this trade. And then you also just want to be monitoring for potential catalysts. So really, this is going to be Fed meetings primarily. Also, just honestly follow President Trump and pay attention when he tweets, because unfortunately that's the meta we're in, where you have to pay attention to that, because they move the market. So especially in regards to posturing about rate cuts. So weekly reviews are going to be looking like tracking all three of those kind of pillars. So the sentiment that we talked about, those put call ratios and large prints, stuff like that. We're going to be looking at the technicals, those IWM to SPY ratio chart, the ratios there, stuff like that. And also on a monthly basis, we want to look for the monthly rebalancing. And we want to be, essentially rebalancing as well, where, if things are starting to look up on monthly candles, then we really want to be more bullish on allocating towards those. So quarterly, I think it's important to just kind of assess that the theses you have are still in play. There's a lot of rotation on a quarterly basis just in general. So it's a good time to be aware that things could change, and maybe this thesis was valid for this period of time, but it needs to cool off, or maybe it was just X, Y, and Z. So that is how I would monitor the situation. Let's talk about an example really quick. I'll pull my face off here real quick. So I wanted to go over this case study because I thought it was really they could potentially have a lot of similarities to what we're seeing now. So this is essentially IWM, and the setup was that the Trump election triggered a big increase in risk on sentiment. So there's a few things I want to look at here. So this is the fall down, nice spill, undercut the lows. Can you see my cursor? Oh, you can right here. So yeah, undercut these lows here, and then just started acting very constructive before this big breakout here. And what we see, I know it's small here. I can pull it up on my bigger chart too, but in this area where the market is essentially trading under this neckline, this big volume shelf, we're just seeing much more big green buys. And then the biggest sign here is this right there, those 3 or 4 weeks, or is this a monthly chart? That might be a monthly chart. Weeks, I think. Yeah. Weeks of just significant inflows, just big buying on the delta, the CVD there. And that is when it broke the top, and it never looked back until it, ran. What is that? I can't read. Probably at least 30%, probably more. And then died horribly right back to that high that we broke out from. So, there's a lot of rhyme and reason to these cyclical rotations, and it's very playable. I mean, if you look at that chart and you say, hey, I'm going to buy when we break out here and everything's dovish, and I'm going to sell, when we lose the weekly 220 moving average or whatever on a weekly candle. And then, hey, when is it time to buy IWM again? Hey, I'll buy it right at the same place I bought it last time when it broke out here. And then you have another clean trade. So always have these big levels these big breakout levels on your screen. That's another kind of just general bit of advice there. What else do we got? So the signals here were a combination. So you had the hawkish, that should say shift from hawkish stance. You had the RUT over SPX break above 1.1, which is, like I said, very significant because that is so far from where we are right now. We are at 0.36 for reference. And the outcome here is that small caps significantly outperform large caps by 18% over 6 months there. And essentially the key lesson is watch out for potential shifts in political regimes when it comes to policy, economic policy. They are the biggest driver because of, like what we talked about, how much it impacts corporate debt and the risk appetites of investors in general. So that is where we are going to leave it for this rotation stuff. If anybody has questions on that, I would be more than happy to answer, but I'd love to just go through these questions and start answering them. If you have more, come on in and yeah, do some of that. And we're back. Cool. So we are now in chill mode, guys. It's been a very long week for me. A lot of craziness in and out of the market. So forgive me if I'm a little bit laid back now, but that's where we're at. We are in Q&A mode. So hit me with what you got. I'm starting to look back through the comments here. Give me one sec. You guys are popping off in here.
Yes, I have a question. Will your couch appear as a special guest?
Tim, is that live on air? Did everybody hear that?
No, not everybody hears, but you can hear the questions if anyone wants to ask it.
Tim's messing with me.
We could patch it through.
Yeah, do we want to take callers? Tim, you want to come on live?
No, I've already been talking to you.
Okay, all right. Sorry, I'm being schizo, guys. My producer's
Maybe
talking.
Eddie has a good question. I don't have any good questions. I'm sorry, I'm Friday.
Okay, all right. So let me pull up charts here, and we're gonna just dive into some of these names you guys are talking about. I'll give you my thoughts on them, anything you want to know, and work through questions as I see them. Oops. All right, you've got my charts. You don't have my charts. You do have my charts. Yes, you can see them. Great. Cool. And I lost my EVMux window. There it is. Okay, now we're cooking. Thanks for your patience, guys. So, Adrian was asking about MP earlier. This is a chart that I am watching pretty closely. So on the monthly, it did the thing. It broke over this key zone. So now we're watching it back testing into it, and we're looking for catches at significant moving averages. So you have the 9-week moving average. You have the 50-day moving average. Roughly the same there. It's starting to pinch right there. It is starting to flag in between that and your short-term moving averages on the daily, which you really need to see it reclaim to power through. But what I'm seeing is this is a high-powered mover through the base and trading back into it. We're also seeing a very similar chart on MET-C here. So MET-C, let's go to the monthly. High of multiple highs, very important level here. We flipped it, and now I want to see it back test and hold, essentially. This is a chart that I think could go much higher. And on this same theme, USAR. All of these are rare earth minerals produced and or refined in the United States. This is a monthly chart where it was a trading at NAV for a very long time, lost that level, reclaimed it, and I think is starting to act constructively. This is one that's going to take a while to break out. Similar to TEM, these IPOs need quite a while to break out of their base usually, unless there is a big like geopolitical thing that will just say, to hell with technicals, we are going to be buying this like algorithmically because it's a fundamental pressing thing, that's not going to go out of awareness long enough for them to load up and accumulate normally. So we are watching the same things. So on the weekly, this 21 weekly moving average, this 9 weekly moving average, very important levels. And it's also approaching the 50% of the range. So I'm keeping an eye on these like there. And yeah, MP is the leader. We also have some laggards in coal, which could be interesting plays. The other ones I talked about are primarily rare earth metals. These are primarily, this one is primarily coal. So just an interesting name long term. It's likely carving out a long term double bottom and will eventually break higher, at least retest some of these highs at 30. So that's a nice, very nice trade for a swing if you're so inclined. HCC is another one that's back testing major base here. Basically, it might come down and retest the 20 level, but I'm not really sure it does. I think it's holding on the 200 month here. I think it's holding on the 200 week here. Really nice double bottom off of that. So these are names that look very appealing to me. That weekly chart looks really nice. HCC, getting real tight in there. So keep an eye on that one for sure. What else we got? Adrian in his REMX. I think this is another rare earth. That's the ETF, yeah. So this one, major laggard overall. It has a lot of dogs in it. But you're starting to see action where if this is a wick off accumulation base, you have the push down, retests. What you do is you draw a line there, draw a line there, draw a line there. And ideally, it comes down once more and forms a spring where it sweeps this out. But sometimes it will form a spring above this. And when it does that, it will likely push higher. This looks like a creek, or I think it's called a creek break on the week off, when it breaks like in the second half of the schematic, when it breaks the drawdown, the downturn line or downtrend line. So ideally what we see is a surge up here and then coiling. Sweep highs, coil. And this is the SOS where it will break out from with power through this top level. So if we do see that, it'll look something like this. So we flush down, we push up, we test this initial push down, then we swipe under that with the spring and it coils and then surges into this consolidation into the resistance of the range. See, it breaks this, then it consolidates right at the top of the range. Then big, powerful breakout above, and air I would strongly expect to continue to the next major volume node, which is right about 31 or 32. So that's what I would like to see in other names like Intel, which is jerking me around lately, but I'm seeing potential similarities there. There's the wick-off accumulation, got that going. So keeping an eye on all of those. And also Unity, I'm looking for a back test. Same kind of stage one breakout. See how it comes under there. Pushes higher, could push much higher. One more name like this. What is it? Wolf. Love this name. They are miner turned data center, putting in a very strong week, confirming off of the long-term stage one base here. So I love this name for significant breakout. We would be looking for a measured move of the whole base, ideally. Which would put us somewhere between $15 and $20, $18. So very bullish on this name. All right, going on down through comments here. So Jesus was mentioning Humana. Yeah, dead weight, but even this is starting to bottom off long-term volume shelves, off the point of control here. It broke the downtrend line. Now it's back testing off a cluster of moving averages. So when the dog in the sector is starting to push, you can see XLV starting to try to make its big breakout here. So it tested through the 200 on that big strong day by UNH, and now it's starting to go higher. This is really clean. That's pretty. So UNH is going to fill the gap for sure.
They've also been oversold off of the shooting, right? And they have some other news too.
Tim,
were they oversold off of the catalyst?
Yeah, Tim's mentioning that they were heavily oversold off of the catalyst of the shooting as well, and just had to retrace into major support. Yeah, they were definitely. So yeah, that's something to note as well. So you can get more rapid price action on a name that otherwise would be moving much slower. So that's something to consider. One more for healthcare. I love OSCR. I'm in this name pretty big, both shares and options. I think that we are going to attempt to break this 23, and if we can, we surge to 30 very quickly. Okay. So I got USR and MP. What else are we talking about here? So we got somebody asking about where to check dark pool prints. There's some Twitter accounts that follow them. In general, you have to have a paid service to some degree. I do not. I just use big prints. I just look for the really big prints, and I follow a couple of Twitter accounts that track those big prints, and I help use that to inform my decision making. And also, of course, if I see a big print, obviously I will work that into my thesis. Paul is also saying whale tracker. Okay, cool. Yeah, that's I believe one of the Twitter accounts. Might be a software though. Talk asking how dated the 13Fs are. I believe, I don't know exactly. I want to say month, something like that. So it's not going to tell you what they're holding right this second, but it's a good idea of where they're at. Adrian sending it got wicked out on RCAT today. Let's take a look at that chart. Wow. That's spicy. This is a beautiful chart, and it's on my focus list for next week. That's for sure. Look at this. This is gorgeous. This looks like Rigetti right before it popped. And this is the trade that we caught in my server this week. RGTI breaking out a key level. Beautiful, beautiful, beautiful. We were in at 1550. Nice continuation. Holding this name. Yeah, come on, guys. Come join us in my Discord if you'd like. We get it popping. And you can find that on my Twitter at Steve Tileman, STEVTEILMANN. And yeah, come hang out. We got some real good traders in there. Best thing about my room is I'm not the best trader in there. Anyways, Trade the Pool also has an amazing Discord server. Come on and join us there too. I'm in there frequently. We have live trading rooms there every day. It's a good time. Moving on. Oh, and smash that like button, of course. Thank you, Paul. Okay. James, I'm not sure if you're still here. Sorry I missed this when I was talking about it, but VIX is a really important index. It's the volatility index. So people call it the fear and greed index as well. It is essentially the index that measures fear and greed. If it is low, that means that fear is low. If it is high, it means that fear is high. So it always operates on the human nature, the aspect of human nature that is we are more scared of potentialities than we are of the reality. Almost always the fear is worse than of the fear of the unknown is worse than the actual outcome. Often you will see names bottom on bad news just because now we know what the bad news is, that kind of thing. So that tracks when you look at this chart of fear, essentially, every single time. This is the basis of the nothing ever happens meme, right? Because no matter what, we're going to revert to mean. Because no matter how scary things are, there will be resolution. And in general, this is most important for tracking. You'll have regimes, you'll have different ranges. I wish I didn't take all my lines off there to make it clear. But in general, you will have regimes at 14, 16, but more importantly, 18, 20, but more importantly, 22, 24, but more importantly, 26. And these are basically going to be it's like a smoky bear sign, it's like what's the fire danger, is are we in red, are we in orange, are we in yellow, are we in green, are we in blue, that kind of thing. So that's what VIX is. It's really important to watch. If you're a day trader and you can only have room for two charts on your screen, SPY, if you're trading SPY or whatever you're trading, and VIX, because you need to see how the market is doing in terms of risk on versus risk off, in terms of fear appetites, that kind of thing. So VIX, super crucial there. All right. Going on through. Ezekiel, thank you so much. This means a ton. I appreciate it. The vibes are impeccable. I do my best. Absolutely. You are more than welcome to reach out to me on Discord. I am on the Trade the Pool server. I'm on my own server. You can find my server on my Twitter handle. I'd love to talk to you on Discord. Absolutely. Um, Open invitation. Everybody reach out. Adrian talking about some really interesting implications of AI, saying, I don't know, it feels weird. AI is taking jobs. The companies are growing like never before. But who will buy the products of people if people don't work to have money? Um, this is part of a much bigger conversation, I'd say. What I would say is that the market will respond to GDP increases and to productivity increases. And if we are at a place where the market is pricing in the capacity of pores to participate, I think that's a less important capacity. Yes, there do need to be people to buy products, no doubt. I think about this a lot, actually, the squeeze that's been put on the average consumer and how AI kind of factors into this. In general, I think that it's going to be bullish for companies, and if it is too bearish for humans, policy will need to be implemented, because, like you said, if you're in charge of everybody of the economy or whatever, you need to structure things so that people can buy things. I mean, the squeeze on half of America right now is astounding. So it'll be interesting to see how it plays out. But in general, I think from a trader's perspective, the AI baskets this theme is not done. This theme is probably going to blow off, and maybe it'll blow off on the realization that it's unsustainable because yeah, corporations efficiency is through the roof, but that means jobs are disappearing, and there's all these other factors. So I'm speculating a lot here, big grain of salt, but something to consider. More tangible here, circle. I do love this chart. It's a nice back test of moving averages today and of this volume shelf. Excuse me. So this is a name I'm watching closely. We are basically seeing a very steep wedge break. And we got to remember this was the darling until liquidity came in. And then everybody's like, everybody all of a sudden becomes a bear then. But this is still a high quality name. It's not going anywhere. There's a potential for it to go incredibly high. Right now, it's trading back and it is basically in the buy zone. So we can look at this. We do a fib range on the whole chart and look at how clean this is. The 7.8 fib, the 0.786 fib, this is called the stop loss run fib. So when you have a range established and the stock is going to eventually break higher and discover higher price, you will often see a drawdown into the golden pocket of the range. This is between the 0.62 fib and the 0.76 or 78 fib. This is the golden ratio level. This is the one where you really like to see it hold. So there were a lot of buyers here. This would just be if a stock is very bullish and just needs to pull back slightly under discount into discount under the equilibrium, the 50% of the range, because then it's the first time since this range has been formed where it has been offered at a discount. This is the first significant level at a discount, so often it'll catch if it's a big, strong momentum mover. That being said, if not, then it often runs out stops of any bulls who tried to get long off the 50, long off the 62, just long up here. It'll just shred them and stop them all out, make them think it's doomed and hopeless and going to zero. And that's when you will find long-term buyers who are buying at a steep discount of the range. So definitely something to keep an eye on. I really do like this chart. It's off the very key level. And when it's clean like this, it gives you such a nice look off a nice round number like 25, right at this curling up 20-day. You look at the weekly, and you don't see much actually because it's such a new chart. But I like this. I like this a lot. Talks adding BMNR. I love BMNR. Definitely. Oops. Beautiful stick today. Look at that breakout stick. Beautiful. So now it's got the double bottom look. It'll probably form a W and break this top, which means it probably goes much higher, which means buy it because Ethereum is also doing great. Look at that. Nice flag breakout. And how I have chosen to play crypto on this leg is look at that. I didn't even check it yet today. I think Solana significantly outperforms even Ethereum. I think we were headed into the altcoin cycle. I think this is the cleanest chart in the market, just about. And so me and my community were buying at 205 to 210 as it found support off this high volume node here on the volume profile. And that basically told me it does not need to go back here. And so it's so strong, it's not even giving clean looks off of here anymore. It's ramping up. It should very likely just surge on up to the measured move of at the least 420.69, which would also be a nice 100% gain for us, and probably 500 plus. So this is how I'm choosing to play crypto for this next leg. I think that being said, I think Ethereum likely sees between 8 and 9,000 before the cycle's over, 7 and 9,000. And I think that's when you sell the cyclical top. Look at this uptrend line. It would love to surge and tag this just like Bitcoin did. And nobody in the universe thought it would happen. When you had, this one. So this uptrend line, boom, boom, draw it all the way up. Nobody in a million years down here thought it would ever do that.
You're showing your studio Discord anyway. I don't know about.
Oh, I'm sorry. On Discord, am I not showing my? Oh, that's an interesting thing. Sorry, Discord guys. Let me switch that for you. Thank you for letting me know.
Actually, that lets us see the comments. If it were wider.
All right.
I don't know, Steve. Are you capable of making the screen lighter?
Yes, I can, and then I just can't. Then I can't see the comments, so I'll just have to flip back and forth. But that's fine. I can do that. So,
no, I'm just joking about inordinately wide screens.
all right, my producer's heckling me. Okay, what else do we got here? So, what else do we have? Adrian said 10K for Ethereum. Yeah, definitely eventually. This cycle, yeah, I think everybody wants 10 and maybe they give 9. Adrian talking about SILG. I entered a small speculative position in AG based on flow. Very speculative, but this is a wild, big, massive breakout, and I would not fade this. I think that we're going to run up into this gap fill here at 1160, and eventually we're going to fill the gaps all the way up here on AG. This is a silver miner, and look at that. Look at that. Through the 200 month with power after coiling for 2 months, flagging for 2 months, I would expect it to surge up to try to take these wicks, but that's going to be a little tough. It'll probably surge to this level, maybe, but probably this looks like a nice pin level here. Nice pivot right around there. So I think it's going to want to come up in there because that's going to be a nice high volume node. We can see that as the peak of this little volume node on the volume profile to the left there. And if it can, which I would expect it to find acceptance here or above, then it's going to surge for this level right there. And that's this key level because first off, it is in this attempted breakout range where it tried to break out and then tried to flag and hold. That's the low of that flag. When it lost that, that became resistance. And every time it touched, it puked horribly. So this is a big level here. This is a big level. Price acceptance here leads to a sweep of this level, cleaning up all the liquidity that is above it, but it probably surges up through that level if it can reclaim this big volume. I think it wants to surge up and essentially come up into this big rounded volume shelf. And this is one that looks like it could be digested through relatively easily because it's pushing off such a massive base. So see this huge volume base it's pushing off of. This is going to provide big fuel to higher targets here. So we can also pull up just the silver chart. It's the ETF. So the ETF is strongly outperforming. So now we can see the miners start to catch up. Silver should be on a breakout to all-time highs. And what we can look at is SLV over GLD. And look at that. That is a beautiful chart. That's a beautiful bottoming chart. And this tells me that you should be moving your gold holdings to silver. Gold will underperform silver for the first time in quite a while if this is correct. So you have the initial downtrend line. It coils around there, surges up, back tests it. That's nice. We can move this up here to form the all-time high downtrend line. This one is about to get tested. What I love is 2 big bottoming formations under this neckline of the point of control. So when it breaks this, it should start surging up in path of least resistance all the way up to this value area high here. And very similar. See, it's the same thing when silver tried to break out insanely. This was a squeeze. This was a silver squeeze. And that failed. This was the level that the squeeze failed. See, it was the level it broke out from. Squeeze, back test, fail, back test as resistance, and depths of hell. Silver underperforming massively while gold is doing okay or flat in this period. And then silver essentially underperforming the whole run up. The whole run up as gold went crazy from here, like that. So interesting ratio chart. Very important to keep an eye on that one for sure. Yeah, Tesla long. That's a long-term hold for me. Boom. I mean, relatively long. But we got in at, where was it? Somewhere off here. It was like 1250, I want to say. one of these days. Boom. Come join us. Trade with us. All right. Enough promotion. Yeah, talk saying, Steve, if you're long IWM, you're short Qs by design. Yep, absolutely. And SOLT, beautiful. That's what I'm in. Interesting. Talk saying XRP, Cardano, and Solana will meet the Genius Act guidelines. I don't know the details about this, but I would be inclined to agree that price action is indicative of them being quote unquote in the club. Um, Talk also mentioning that that's a lot of one side risk to only have your crypto in BMNR just because it's one holding company, it's or one treasury. You know, there are always individual risks there. I do agree with that. That being said, I love BMNR and send it, but stops are good. Diversification is also good. Is BT what is it? BT Bit Digital? This one's very appealing to me. This one's very interesting to me long term. This is one of the only ones that hasn't run significantly, which also could be a warning sign. But if we do see big flooding into these treasury names, this is one to keep an eye on. Hey, Tyler out here killing it with some AMD and NVIDIA puts. Good to see you in here, bro. Been slowing down and doing more analysis than actually taking trades, trying to learn more, buying puts on some of my long-term holdings. That's awesome. That'll be a great lesson because it teaches you to not get caught up in your trade and stay on one side of it. And you're actually learning about the price action and how price negotiates as it goes higher, which is beautiful. That's what we want to do there. Love that. Yeah, Adrian saying he doesn't really want to do sock sell. Try not to get into leverage stuff. I love leverage stuff, but I hate 3 times leverage stuff unless it's a day trade. 2x leverage is the sweet spot if you have high conviction in something. It will not shred you on the way down if it's a healthy correction. It'll still hurt. So, definitely always trim highs, and if probably good to move those trims or move some of your exposure into the common shares as it goes up, or do things like hedge, covered calls, whatever your style is. Depends on the setup, of course. But yeah, 2x leverage is nice. I really like 2x leverage. The J420 asking thoughts on WTH. What the hell? Worthington Enterprises. I don't know what this is. Let me Google it. Okay, industrial manufacturing company composed of 2 business segments, consumer and building products. Interesting. Okay, let's look at the chart. We start high time frame. It is a unicorn. Looks like. I mean, it looks like a name that was obviously way underpriced, just getting started. Relatively young name. Just broke a long term base. We can go back and do like quarterly candles. Yearly stick is just breaking out of a 2-year consolidation. I would expect it tries to sweep this high. It probably is on its way to much higher. This looks really good. I don't really know what they do, but it sounds like industrial and boring, and those are often really good companies. I think of things like JCI, something like that. So what the hell? I am giving it I like it, but it could be a double top short term. It could retrace a little bit. Probably doesn't retrace too much. Gotta cut off all that big volume so I can actually see what's happening up in here. Waiting for it to adjust. It's not adjusting. Okay. I will have to look at it a bit closer to see how it digests this range. But in general, this looks like a crazy explosive. You could even call it like a cup and handle. So like I said, if it breaks this high, it likely keeps going. It looks like it's just algoing up, and this is a distribution pattern short term, this top wick into here. But look, big CVD buys. So I think that dips are going to be bought very aggressively in this. You see the big CVD buys here as it formed the bottom, that nice volume spike. So if this was a big CVD spike red, like on this day, a little spike, but not too bad. This was de-risking here after the big push up. I think it comes down a little bit and then pushes higher. Maybe you get like a volatility contraction pattern where you have this cup and then one half this size like this. Then if we're lucky, we get one more that's even tighter, half this size. And then you play the breakout of the neckline of all of these consolidations. So that's what I would kind of look for on a name like this. Cool chart. Tyler asking, is it smart to add to my stocks that are bleeding in the rotation so the rebound is nice, or should I be following the rotation? A mix of both. Let's see. In general, I would recommend on not cutting the flowers to water the weeds. That meaning if I have a trade that isn't working, I don't want to add to it unless this is a really long-term account and I think it's a really good level long-term where I would be okay holding and defending against this level. In general, I think it's a much better rule of thumb to add into winners is they're strong if they're a long-term chart and it has a lot of room, and to de-risk and size down on stocks that aren't acting right, or just to straight up respect the stop and wait for it to stop you out and deal with it like that. So that's what I would recommend. I would recommend looking for new setups that are starting to break out and looking for established supports to buy your long-term holds on breakout on back tests, or if they are breakout setup resetting up on your long-term holds, then you can add to those for momentum as well. The important thing with these tranches in is that you have to have separate stops for them. So if I'm in a stock that I think is going to break higher, let's say, I don't know, say I'm in NVIDIA, and I'm not saying I do think this necessarily, but say it flags out for a while and holds this high or whatever, it holds the moving averages, even though it's way up here, I can buy more, but then I have to have a stop under wherever that key level is that I am expecting it to hold on that new chunk. You can still have your same position managed however you like, but for the new ads, you have to respect risk tolerance, because you could be buying something that fails. And then all of a sudden your average is down here, you buy more down here, it goes down here, and you're like, oh, I'm break even, I'm going to add more. Then it just starts to go a little bit red. You're red. If it goes back down to where you bought, you're screwed. If it's the end of a trend, you're bag holding forever, or you have to take a really gnarly big stop out. So that's why we don't want that. So I'm going to speed up a little bit here because, man, you guys are asking questions. I like it. Lumo asking, can you build a trading bot on TTP? We are in the process of exploring options for automation. We are not at this point. We don't have any timeline for that, I don't believe. But it is on our radar.
You can do automated trading using Signal Stack.
Wait.
It's in beta that you can do it right now.
Okay, actually, there is a program in beta using Signal Stack. You can do automated trading with Trade the Pool. So that's cool. That's in beta though. So
There's a stream. Yeah, check the stream on at least YouTube. I think something glitched on the full stream.
All right, sorry. My producer is telling me you can. Producer is telling me you can look on. We have a recent stream on the automation process, I believe, so you can check that out there. I can try to find a link for you too if you're interested. Feel free to hit me up after if you're interested in that. Okay. Tyler saying, anybody buying the FIGR IPO? Figure Technology. Whoa. I sure didn't. Interesting. It's in a range. I don't know what they do, but that's not a chart that has enough history for me to buy. Speaking of IPOs, I thought you were talking about Figma, recent IPO. This is a name that I think might be a buy down here, right in the pivot, with a potential to break up into the gap here. It's still early and it's got heavy downtrend lines here. So it's going to be a battle. Watch that 57 to 58 area. But yeah, keep an eye on this one. Adrian saying Wolf is the one that got away. Hey, brother, long term, it's not getting away. Long term, it's just breaking out. I mean, sure, it'd be nicer to get in here like I did. Just kidding. But, still got a long way to go. I am nowhere close to selling. Okay, James Rank, good to see you in here. Would you ever mess with anything under a dollar? I would need a real good reason. It would likely be a day trade. Anything under a dollar is needs to pump to be not delisted, assuming we're not talking OTC or whatever. So be very careful. That being said, I cannot say I have not played some likely engineered squeezes to keep companies from being delisted. Buying when they knife under a dollar, expecting them to go back to a dollar. You can often get 30% gains on a very, very small position size. Only do this with I literally will buy like a couple hundred shares at $50 or something, or, at 50 cents, and then often get the flip or catch the retest of that reclaim of that one. But you're playing with fire. It's not investing advice by any means. Top caught RGTI, beautiful. Yeah, I love that one. Leo asking, Steve, if I were to start from zero, what would you do to grow your capital and make a living out of trading? What would be your capital? What things to avoid? You're very welcome, Leo. So, what I would say is, rule of thumb, if you want to be a professional trader, you need to be consistently profitable for at least 6 months, I'd say. At least 6 months, at least 3 months, but really, I'd say half a year, because it is very stressful. You need, I would say safely, at least 30,000, and that is on the low end. You need to have a lot of dedication and a lot of grit and the personality to be willing to take on a lot of stress. I was a full-time trader for 6 months, and the stress burned me out so fast that I needed to go back to part-time trading and education. And, I have a consulting business and stuff like that, where it's not all coming down to, you know, how well I'm executing. Execution and analysis are different skills, I would say. And some people are better at one, some people are better at the other. Um, so I think more so than what is important in terms of starting capital is mindset and willingness to have, like, you need to have a fallback plan, because this is hard. I'm not trying to discourage you, but yeah, start with at least 30,000 if you really want to do this full time, and make sure that you know your stats and you feel confident that not only is your system consistently profitable, but that you have your emotions in check enough that when it becomes quote unquote real, when it becomes your actual job, you won't I don't want to say fold under the pressure, but it's a lot of pressure to put yourself under, and just be ready for that reality. That's why I do love prop firms, like Trade the Pool. I think it's a good intermediary there, where you can start off as a hobby, and if you are good enough, you'll pass the accounts and you can start withdrawing actual paychecks. So that's how I would go about it. If you think you're ready to trade your own money, make sure you have 30K and 6 months of experience. Otherwise, play with the prop trading accounts. If you're good, you will see that, and it can grow organically from there. That's what I'd say there. Thanks for the question. So Adrian, talking about Riley, RILY. We spoke about it on Friday, got in at 5, and I know it's looking great. That's a killer trade. Good job, dude. So what happened at 5 that made it hold? I think I was scared on Friday when it closed at the low of the range, but hey, it swept the low and reclaimed. Hey, what can you say? So we had a range, and it was offered at a discount multiple times and could not even get down to the 6.8 fib. This is very strong. I think that it's got a megaphone pattern going on here. I think it surges up, cleans up some of these stops at this wick, and eventually starts testing this gap. This is one you got in at a great price. Honestly, Adrian, do your thing, practice your risk, but I would be shocked if this made this new low. And if it did, it would go way lower. So you could put a stop at break even or a little bit in the green and trail it under these moving averages, these daily 20 and 10s. It might volatility wick under like this or something, but I would not expect it to break this low. And that's a very small amount of risk for you now. So you now have the potential to essentially free roll this trade into a massive winner that could be potentially a multi-bagger. And these are the kind of trades that I really do recommend you juice at least part of it. You can say you can stop out half in profit, or you can take half off at 30% or 40, whatever you're at. And then you can let that last chunk just run and run and run. And if it comes back and stops you out on the last half, say, you still made a lot of money on the trade. You still made an average of 20% on the trade. Beautiful trade. So that's how you can take a small or a good entry like this and you can snowball it. And now all of a sudden, let's use this. You entered at 5. What a snipe, dude. Yeah, look, you put a stop right under there and you shoot for this gap. That's a 100% trade with a 3% risk. You're operating at 32% risk reward. You know, like what can you say? If you could make every trade like this, you'd just be rolling it. So I don't know. This is one where I would say that the risk for at least part of the position is you owe it to yourself to see what this thing can do. It could come all the way back up here. If we are in this the environment that we're talking about, where stuff like this pops, I mean, this has room to be absolutely massive, way back up to 40 or something, even, you know. But realistically, like 15 in a year or something. So for me, that's worth a hold. But yeah, that's how I'd analyze that. Great trade. Great trade. All righty. Yeah, Adrian talking about probably some sort of universal income or something needs to be implemented. Yep. And so then we're just playing the game of, okay, I hope the elites will, you know, let me live. I think probably we need more comprehensive policy and increased social safety nets and things that will set more Americans up for success instead of increasing the income inequality, which is unprecedented. The pandemic was the biggest wealth transfer in the history of the United States. And we are just starting to see the blowback from that. So we will see. I am pessimistic on this government in any form similar to what we're seeing, giving universal income. But maybe that's what it'll be. Who knows? Either way, it's going to be very interesting. Yeah, talking about soybean farmers looking for a handout. China went to Brazil. That's huge. That's a big deal that I don't think enough people are talking about. That's where they purchase their commodities, their soft commodities from, primarily in terms of what is it? Is it mostly wheat? I don't know. I don't even know what they grow there. Soybeans, you were talking about. Yeah, soybeans, very important. Okay. That's why administration wants higher Brazil tariffs, even as we are in surplus. Yeah, yeah. Okay. Y'all's talking Riot. Look at Riot. It's a wow. Looks much better than last time I looked at it. Trading back over old lines, so it's starting a stage 1 breakout potentially. Man, this thing. Look at all these schizophrenic scribbles of me trying to time this thing way back here. Insane. I was not as good of a trader back here. I don't know what I was doing. But we are starting to see this stage 1 base, and hey, years old lines starting to respond. There's the big level. So we watch 14 or 1550. We look for expansion to 1883 and likely to $20. Right? Looks good. Miners in general look good. I love Wolf. I like all of the ones that shifted to data centers. They're all gone. Like I can't chase these, even though these are going much higher. See, I mistimed this here. I had to sweep out, and this is the spring of this wick off here. So I can't buy that. CIFR. This is one. Still can't buy it, but hell of a breakout if it backtests or something here. This one I could buy. Look at that. That's pretty.
Just bring up Solana or any of the other, because it's crazy right now.
Yeah, and for Tim
Solana
here,
specifically right now.
For Tim here, Solana. Tim, I don't know if you were here earlier, but I was talking about SOLT, and this is what I'm in using to trade it. So I got in
Okay.
last week right about here. I'm up. Whoa, I'm up that much? No, wait, I'm up that
That's
much?
cool. No. Just look at this evening. Just this evening. That's what I'm saying.
Oh, like literally right now.
Solana and Dogecoin are the big ones. Yeah.
Boom, expansion. Let's look at the hourly chart here. I was told that they're breaking out right now, and look at that. Beautiful. All right.
If you want to
There you
catch
go.
up, Ripple might be about to catch up. It's at the top of the downward channel, but obviously everyone's going to rip you Litecoin, Dash.
Look at this. Yeah. Crypto so hot right now. This is how. Oh, this is another way I'm playing crypto. My Galaxy. That's a long-term holding for me. Wow, another great day for Galaxy. Oops. Solid, solid, solid. So we got in on this one at $20 in here, and we bought at 20.50, and then we averaged down at 19, I believe, 19 or 19.50. This was a big conviction hold, and I think this one's going much higher. Look at the clean flag break, clean flag break. We are going up. Move this whole thing, something like that. Love this name. So BitDeer, got to put that on my focus list. Yeah, but I like Oscar a lot into next week. I still hope Hinge works. It's back testing the breakout here. This one I'm a little over leveraged in, so I sure hope it works. I think I'm back to break even now. But if this one works, it'll be a real nice trade. This is a great company here. This is super cool, guys. So Hinge, they are a company. They are a digital healthcare company. They're software as a service. They sell their package to or their service to insurance companies to include in their package of services they offer. And what they do is they use smartphones to diagnose and treat musculoskeletal disorders. So 40% of adults have musculoskeletal disorders. 9% are currently seeking treatment via physical therapy. As somebody in that 40% who has in the past sought physical therapy, it is a pain in the ass. It takes months to get in. You only get seen for a couple months, and then you have to wait months more to get in. There's copays usually. There's a lot of reasons why people don't do this. And if I had the option to to have my phone be the vector for diagnosis from a team of skilled physicians, and they were able to adequately treat me, that would be very appealing to me. They have a 90% customer acquisition or retention rate, and they currently are only being seen by 5% of the target addressable market. So amazing growth story here. Obviously, incredible margins being a health software as a service company. And most importantly for me, look at this damn chart. So darn pretty. From IPO, is clearly undervalued, and it's just flagging up in this beautiful channel. Held the channel beautifully on perfectly flattened EMAs. What a flag, what a base. This should push significantly higher than these two highs here. We should see 65 minimum, likely. We should see 67.50 minimum, and likely a push up to over 70, 75-ish. And long term, this thing is going, I believe, at the very least to 80 and probably much higher. So love this company, love this stock. And I'm burning out here, guys, so I'm starting to wrap up. I will do my best to get through all of these questions, but we're going to do not lightning round rapid fire here to finish this up. So if you have more questions, get them in, and in 5 minutes, how about that'll be the cutoff for questions. So first off, we have Harry S with MSTR reversal. I know it's trading into a key level. Let's talk about it. On a weekly chart, what do we have? This is the level where we had a major surge in institutional investment with, well, this big top candle, but look, this one here and then this push. So this candle here is the zone that I'm really interested in on the volume profile. This node, this is the level where they should be holding it. This is also the level where they held it last time and pushed up off. So if it is going to catch, this will be the place. You can see as on my crayons here, they did not do what I thought it would do. It failed to break out here and needs to push back. We are still in the range. We are holding the 62 fib. If 320 holds, then we likely see at the very minimum 369. And likely it retests, basically undercuts this and reforms a base up here and retests this 420 handle. So that's what I look for master. I always call it master, micro strategy or whatever. My brain's so broken. I just see things in tickers and the word that they most look like. So that's where I'm at on micro strategy. I like it, but it's risky, but good risk reward here. Okay, okay. Adrian agreeing with thesis of silver over gold. Love to hear it. Love to hear it, especially miners. Yes, absolutely. So I'm in AG, like I mentioned. That was just really quick. I saw flow. I said, hey, I'll buy some. I need to do more research this weekend, but I just wanted to have a little piece in case it goes crazy. What else? What else? What else? Don't BT. It's a rug pull. All right, I'll do my research. I'll do my research. Thanks for the heads up. Oh boy, oh boy. MicroStrategy is useless. It has no long future. MicroStrategy is a Ponzi scheme, like by every metric. So I don't short Ponzi's, but I am careful when I long them. So I agree. All right. Best place to buy was when it filled that gap on WTH. Do the opposite of what you intuitively want to do, aka enter when other people would get stopped out, aka use that 0.78 fib. What was the example? Circle. Use that 0.78 fib. Slap a fib on everything, and if something wicks under the 7.8 and holds, you long it and you put a stop under where it wicked. That's incredible risk reward. Incredible risk reward. You're putting on a trade for circle here. You say, hey, I'm not greedy. Just give me the next fib up. Give me the 62. I define my risk under that low. It's a 30% upside for 5% downside. You take that every day of the week, even if it doesn't work more than half the time. You know, we got to look at things. We got to think in terms of bets. You take this bet, you take it. You know, so that's where I'm at in terms of doing the opposite of what intuitively you would like. Yeah, absolutely. Okay, all right. Yeah, Adrian, you did mention APLD and Lyft, I believe. Yeah, you crushing it? I bet you're crushing it. I know Lyft's doing well. Look at that. That's beautiful. So it's breaking the long-term 50 fib. Excellent. Beautiful, beautiful. Now we target the next one up. 21. Easy peasy. Very likely that it goes higher. We have a nice kind of pivot level going on here, I see. Aligning with that 21. I think it goes there and then test the next pivot up. This next fib, the 2678. When you have an explosive name like this, it's going to want to reach here. And if it's going lower, it's going to want to go here too to sweep out those stops, those short stops with stops over somewhere in there. So yeah, boom, nice job. Lift is looking very appealing. So as you can see, I was charting it out then too. I thought it would pop up and then back test it. It coiled under and popped it. So that looks better. This looks better, I think. Maybe it still needs to back test, but I don't know. This is looking like it's okay. It swept this high. Okay, so guys, here's how we look at this. We have a coil, we have a target up here. Intermediate target in this base. We are expecting it to go here and higher. That's the bull case, but we need to see what it does at this level. What did it do at this level? It swept, came back, and it closed pretty close to it. So what that shows is price went up, it tested breaking out of this range, and if it's going to dump, it should be a pretty aggressive sell. If it hangs out up here, it's finding price acceptance. It's digesting the sellers here at this 19 handle. And then it's setting the stage for the push up for the bigger test. And this is Chaos. Shout out Chaos if in your in the chat. It's a pretty classic W formation here. And our target, if we break the middle of the W and accept price, is the top of the W. Easy peasy. And then if it accepts here, we target a measured move of this whole W, which would look something like my target. That's why the measured move 2 times this pullback. So very interesting name here. Great call out there, Adrian. You're doing good stuff. Love to see it. Oh, now you're just flexing on us, dude. You got into iron then too. Beautiful. Love to see it. All right. WGMI. We are gonna make it, boys. Boom. Look at that. That's okay. This is insane. This is what I'm talking about, guys. How can you be bearish when Solana, when altcoins and crypto miners are doing this? How can you be bearish? Crazy. Craziness. Target the measured move. We will get to, look at that. It's already doing it. That's insane. What an explosive breakout. So it's already testing the fake out breakout fib. If a range breaks, it will very often target this 1.27 fib. If it can find price acceptance here, it surges to the 1.6 or the 2. If it is not ready, it will fail here and backtest the highs and decide what it's going to do there. So key point, but this smash candle right into it. I mean, geez, I wouldn't short this. If I was short this, I'd be terrified. So man, all of these baskets, this whole basket's looking good. We got to look more into it. I really like BitDeer. I really like this one. I think this is my favorite right now to buy right now. So I may be buying this one, and Wolf is the other one that I freaking love. Even though it's more extended short term, it is a much stronger chart long term, I believe. We are just, look at this. See this level I marked? I didn't even draw it back, but if I did, you could see significant area where if it gets above, it likes to break out or test a breakout and fail. Previous resistance. And most importantly is the zone below. That's the point of control. That's the big shelf. And when it pushed off of there, it's in go mode. Go, 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 go mode. So now it's just continuation mode through this big level here. So very notable. We'll be watching the 1173, but I think it's very, very likely that we reach up and we try to negotiate this big empty space. So somewhere over 1670, 18's a nice target, 20's right in that range. Could keep going. 24, very possible with this empty space up here. We would love to fill this empty space up to 25. So keep an eye on this if the sector keeps going crazy. Very, very strong chart there. And talk, I know you keep saying it. They were gifts. You called it. My head was not in the market at that time. Unfortunately, I will be kicking myself as they continue to scream, "You are the GOAT. Come hang out in my server so I can not forget about your trades during the week." Oh man, yeah, look at that. Apparently, this is the futures contract. I didn't know there was one. FMNA. Micro. No, this is not. What is it? Do I have the wrong ticker? FNMA. Fannie Mae, not Fannie Mae. I'm dyslexic, by the way. Look at that. Insane. Yep. This is one of those. So, guys, like probably 10 to 20 times a year, you get such a, if you look at enough charts, you get such a slam dunk fat pitch setup that you should size up and just slam it. And this is one of those. And I will be kicking myself. Amazing, amazing play. The J asking, would you rather trade shares ETHA or just Ethereum? I think it's a matter of liquidity and convenience. I love Ethereum or FA because I think I actually haven't traded just Ethereum in quite a while, but the liquidity on FA is great. It's easy. I can do it in my Roth. Whereas where I want to hold crypto, I want to hold it long term. I'm not selling anytime soon, So, yep. I like that. I like Ethereum FA, the ETF. Blue Boy giving some great advice, by the way. If you want to be, I think this is for if you want to be a professional trader. Whatever you're planning to hit your goal, multiply by 4. Don't chase the money. Chase a consistent process. Yeah, Blue Boy, I can tell he actually knows what he's doing. He's probably a professional trader himself. And keep a job. He's in sales. Gives a chance to do a little both. Yes, I tell everybody this. Everybody wants to be a full-time trader. I feel so much better being a part-time trader. It feels so good to have a stable income and the space and the freedom to not freak out if trades go bad, and just to take it in stride and say it's part of the process and not be too outcome oriented, because you can't be outcome oriented when you're a trader. You got to be process oriented, and then the outcome, the money will come, they'll follow. But if you need to pay rent, you need to pay rent. So keeping you out of situations where your back's against the wall and where you're dependent on immediate success for your financial stability. That's when traders overextend and put themselves into very bad situations. So 100% with Blue Boy here. Imran giving me some tickers: ONON, TTAN, and SYM. Okay, so we got shoes. I forget what TTAN is, and Sim. Is that robotics, symbiotic, or is that healthcare, medtech? I don't like this long term. This scares me. It's a probable double top here. If this is medtech, if I'm remembering the ticker right, then they're in a kind of tough spot with ISRG talking about the impacts of tariffs. I am long this one, but tactically, and it looks like I might get stopped out here. I got long I got long super at a super good price. So I'd probably take a break even stop out here. And it was just, hey, I thought I got a snipe and I should have taken whatever that was, probably 6%. Yeah, should have probably taken it right back into that resistance. I was looking for point of control. But hey, I the risk to reward is still fine for me to hold this here because I'm long here. Stop out and lose what? Lunch money? Less than 1%? If I'm right and this is a higher low, which actually I don't think it is, to be completely honest. And that's a 10-1 risk reward. So whatever. I will take my stop out on the chin. But let's look at your charts. ONON. That looks ugly. I don't like it. It would have to reclaim here. It would have to reclaim the short-term moving averages and the point of control at 45. This looks very sketchy. And there's been a lot of weakness in certain retail names. Where could we look for support? We can see if it can hold this uptrend line at $40. It'll undercut it and hold this low. If it will, scoop that and then reclaim that. You could try to buy it on a reclaim of this level at 40, or you could try to buy it at a reclaim here if you do like this name. Personally, I don't love it, but I do see why it could be bullish. It could be simply chopping out a wide handle pennant to this cup. What that would look like is something like this. Scoops down, higher low, reclaims pennant, works its way up through the averages, stops out or tops out after it sweeps that high, which would show an incentive to go higher. Flushes out, maybe to here, probably to here. Takes a while. I think this one needs to take a while. You could try to buy it long term here, but this is the bull case. The bear case is that it flushes hard, at least to the 200 week, and then decides what it does. This is a big level here. This is the base. If it flushes and loses that 40 handle, it really shouldn't have lost this handle. So it needs to quickly reclaim that 45. Otherwise, it probably is a grind down to 35, 33, something like that. So keep an eye on that. Titan. What is Titan? Service Titan. I don't know what this is. I thought I did. This is a chart I like. I like this a lot. It's very interesting. It's a new chart. I have to look at what they do. But in general, here's how I look at new IPOs. I will draw a fib here. And what I will do is start looking at significant levels. First off, obviously, is point of control. This is all that matters. To be completely honest, this is like when you see a volume shelf that's this defined, this is all that matters. You buy into this until this breaks. If this breaks and it backtests and it can't reclaim, you sell off of that. This is the pivot. As you can see, fibs, they just work. The 50 fib is right there, right at the top of that range, essentially. Yeah, so what we can look for is a healthy digestion of this range. Essentially, here's the range, the full range. And now we are confirming with this bottoming action at the 50 that we are done trading in this bottom half. This is deep discount. This no longer exists, if we're right. We are operating on that assumption because it caught 1, 2, 3 times. This is very healthy bottoming where it comes down, reclaims, pushes up into the golden pocket. So in between the 6-8 and the 7-8, it's okay that it can't break it yet. You know, this was a big failed move here, but it's coming back into the base, into the big support. Catches once, pushes up, sweeps it. We love to see this with a strong reclaim. This shows that it got all of the stops out here and gave institutions, I should say, a chance to add more at the breakout level. We love this. We love this previous resistance surge through confirming and reloading on multiple supports. We love this. We also love that this push down on the week could not push lower. Why should it? It already reloaded. We should be ready to push. It should be just renegotiating this little range just to sweep it for maximum efficiency to get the most transactions filled at this point of control and under that point of control in this zone, in this little zone. That's where the most shares were filled. And we see on that high volume a strong push up. So now we are operating under the assumption that this is the range we're trading in. So now what we can do is we can move this range here. This is our new range. And we can see we're still rejecting the 50% of it. So likely what this means is this is a breakout setup, but it's not quite ready yet. So it will probably need to push down and test somewhere. It could test right here. That's a nice spot because it's the confluence of the moving averages and also this previous upwick here. So that's the fair value gap in that zone. That's easy to push down in there. So it might do that, sweep higher and push higher. I'm sorry, I'm not sure if that notification sound is coming through. Let me mute my soundboard or my volume mixer. Okay. Apologies, that was coming through, but should be good now. So T10, yeah, keep an eye on some action like this. A catch here. Otherwise, it might need to retrace deeper in there. But yeah, that's kind of what I'd look for. It should go higher, and we should be seeing a channel forming here, which would look like you draw from the top to the top. See, we got 3 nice touches. 1, 2, 3. We like that. If we draw to the bottom, we have just about a nice touch, and we don't mind that it doesn't touch all the way. And actually, it might barely over or undershoots it. So it's twice. It could not quite reach it because people were waiting and anticipating, and it didn't quite get that low. So we love seeing this. And as you can see, look at that. This is all very clean. When the chart lines up like this, it's a very good sign. It's setting up like geometrically for these confluence of bullish indicators. So if it can do this and claim this, that's the next goal, to sweep this high. It's also testing the equilibrium of this channel, and we could see a small undercut, then a reclaim and a surge up. So that's definitely what I would look for here. I like this chart a lot. I'm going to add it to my watch list. Good stuff. And did you have one more for me here? SYM. Yeah, I don't like SYM, I think. I don't love it, but you can watch the 9-day EMA and the 21-day EMA. And if it holds this level, you could play a flag here for a push higher. Just not my favorite on the monthly. Oh, okay, never mind. Jay, just in case you missed it, I know you asked this a while ago, but I would rather hold Ethereum FA, the ETF, just because it's easier for me, where my money is. I don't have that much money in actual crypto markets. For example, I'm in SOLT instead of having money in Solana itself. It's a comfort thing primarily for me. I'm not a crypto kitty. You are very welcome, James. That means a lot. I appreciate it. I hope to see you back next time. Leo asking about my trading indicators. Absolutely. So I have videos on this. I have accidentally kicked my cat. I have multiple videos on the indicators that I use and my personal setup. You can find them on Trade the Pool's YouTube channel. You can go to their YouTube channel and go to playlists, and you'll see a playlist of all of my videos. And look for any that talk about my indicator setup. I think it's called like my personal favorite indicators, and it was relatively early on in there. If you have specific questions, feel free to hit me up on my server, on Trade the Pool's Discord server. I'm always more than happy to answer any questions. Also, I do have some secret sauce too. Just throwing it out there because you're asking about indicators. I have a custom indicator that is the primary one I trade off of. It's my trigger system that I've tweaked from a very, very good trader that taught it to me. And it is a very highly reliable system. And this is part of the service that I do sell for 20 months. Just saying. But Anything else, I'd be more than happy to talk about completely free. And yeah, I got a good amount of indicators that I don't use regularly, but I just pop on every once in a while. Um, and I talk about, I think, all of these in, if not that video, then other ones. So definitely check those out. We got Tyler Smith. Always good to see in here with PDYN. PDYN. This is Paladine. Paladine AI. I like this. I like this. I thought it was more aggressive. I thought it could be very explosive here. I really like Paladine. So this is a very cool name. If you can look, see this blue line here. This is the lower value area, and this is the higher value area. So do you remember the wolf stock that I was talking about? How it was breaking out of the stage one base, and the wolf chart is right about there in relation. So that's what I would expect from Wolf. Ideally, a big, big breakout like that. And then a cup action as it forms a new stage one base starting here, all the way up here. And it should cup here. This should be a higher low. It's catching off of the 50 week, which is the 200 day, I believe. Yep. Boom. There we go. So if we can reclaim the 200, then your guide is this 9 and 20 EMA cluster to curl on up and bring you to the promised land, which should be a retest of $9 first. That's the big point. If it can flip 884, then it targets the top of the volume shelf here. That's 1033. So you've got a nice trade on your hands here if you take it and look for it to hold those lows. So you can target minimum the point of control, which is not amazing, but 1.6. That's pretty good risk reward. I think it wants to clean up here. I think it would make sense. This is 1, 2, 3 times it's touched. It should touch again before it decides what it wants to do long term if this bottom holds. So this would be the target to the upside. Call it $12. Just the top kind of zone where it starts to be resistance, and that puts you at 5 to 5 or 5.5 on a name that looks good. These AI names, like I said, they are not done. I just don't believe they're done. And oh, look at my Tim. Look at my Tempus. Is that what they're called? Tempus. Yeah, Tempus AI. This is a long-term hold for me. We got in one of these times. No, this was one that we bought earlier, I think. I think we bought it on this gap fill. This was one of the first buys after the crash. Yeah, when I was marking it out here. I think I bought on this somewhere in this area. Maybe I bought on this breakout. I don't know. Somewhere in here. I think my cost basis is below 45 somehow. So yeah, this is one of those that you just like, you buy dips and it's going to keep going higher. It's going to at least go to 110. And I think it's very likely to go to 128 or 150 in the next year. Love, love, love this name. On the monthly, look at that. Beautiful, beautiful. It's just starting to break out here. The final trigger will be through here, through the highs. That's a great breakout of this massive base here. This massive base over 71. Love to see that. All right. I'm burning out, you guys. We're almost done. How long have we been going? 2 hours. Oh, let's go, baby. Can't say I don't care about y'all. All right, Danny Dollar's asking a key question. How do you decide where to draw your fibs? From the actionable range. So it depends. There are multiple times and reasons to draw fibs. In general, when you have a defined low and a defined high, you draw your fibs there. Fibs from internal ranges like this are only relevant once support on the longer term fib matters. So for example, this was the cleanest thing in the world, this low to high, to tag the 50 perfectly. And then you break higher. So, I mean, when it's obvious, right? When it's less obvious, for example, though, like when it catches here, then we can say, okay, we push up here. We strongly confirmed off the 200 or the 200 week moving average and the 50 fib of the range, and off 350 the whole number. This was the easiest buy in the world. I wish I saw it like this back then. I don't think I bought it. I definitely didn't buy it down here. I probably bought it somewhere up here. So once you know that that's the bottom, then we can use this as our range. And then we see a lot more actionable information. You see, it needs to surge above the 50% of this range to push higher. And what does it do? It surges up. And where does it sell? Where's the immediate impulse move sell? The 78 fib. the top of this golden pocket. And where does it catch? Right off of the 50, along with confluence of moving averages and all that. And then breaks the range. And then what does it do? Then we play our range extensions. See the 127? That's where the first sellers step in. First red candle, where if it was a fake breakout, this is where they'd step in. They try, buyers immediately step back in. So now we surge, no green candles until the 168 fib. What do? We wick up, tag it. Next day we puke massively. So there were sellers here, right? But what do? They strongly buy off the 1.27 fib, showing that nope, we're still bullish. We close at the top of the fib. Next stop up, the 2, the measured move. And right about there is where it started consolidating, tried to push up, and had the big sell. So these fibs are so incredibly important. So incredibly important. I do have at least one, maybe multiple webinars on that too, as well in that playlist. So definitely go check that out, and you can learn a ton more. I think that's probably one of my best ones because I'm a pretty proficient fib trader, and it's one of my most used tools, and I love talking about it. So absolutely. Talking MSOS, maybe the only pot stock for me, but Cureleaf was in his town. Okay, MSOS, yeah, I agree. Don't pick winners in a bucket of crap. Buy the bucket of crap if you believe in the bucket of crap. Don't place your bets on one piece of crap doing anything too crazy. That's what I would say. All right, guys. We have reached the end of the questions. Thank you so much for tuning in. We're a little over 2 hours. I usually don't go this long, but hey, I had a good time. I hope you had a good time. Let me switch back to my beautiful face. Here I am. Okay, it's been a long week. It's been a long day. I had a good time, though. I hope you guys learned something. If you learned something, please smash that like button. I hate myself for saying that already. Not even as a joke. Okay. But show some love. Show some love. I put a lot of work into these, and it's all for you guys. If you appreciate what I do, come on and join the Trade the Pool Discord server. We have a lot of good conversations and talks and traders there. Join my server. You can find it on my Twitter handle. Give me a follow, please. That'd mean a lot. Steve Tileman at STEVTEILMANN. And thank you so much. I am burnt out. I'm going to go have a beer. I hope you guys all have a great weekend, and we will hit it hard Monday. Come on in. You can see what I'm watching, looking forward in my trading server. You can see what all the boys are watching in Trade the Pools server. They always have good traders every morning. So thank you so much. I am done with my spiel. Take care, guys.